Hello, guys. Good evening. Welcome back to Ask Wonda. Now, on the program, every Sundays at 9 p.m., we take questions about the financial markets from everybody. Whatever question you have about the financial markets, you can either ask on the program or send in your questions prior to the program. And on the program, you're going to get a live answer from me. Okay, so diving into today's questions throughout the week, we got different questions, and the first one is, what are your thoughts on BTC? Now, clearly, Bitcoin has been in a bit of a bind all week, and we've seen a sell. If you attended the midweek live analysis session with me, you would have predicted a good portion of the dump. I think I called the sell all the way down to 22,000, 22,003, 22,002. I wasn't really sure if the market was going to break, but on the short term, I called that deep down to 22 to 22.3 $100 level. But unfortunately for us, we dropped a little lower than I had earlier anticipated. Yeah, so I wasn't expecting the market to break below this level. So I was just more of at least we should get back down to this level from this resistance zone here. But as you can see, we actually went further down than I had anticipated, and we have a little bit of a recovery going on right now. Now, the question is, are we going to continue going up or are we coming back down, right? Always we're trading continuations, trend continuations. So as of right now, are we going to continue going up or are we, is the trend exhausted and are we going to come down? Okay, so now looking at this market, this is where we are. Pretty much broke above that minor resistance there. So I think it's very safe to say that we should see somewhere close to 22, 3, 400. We should see a decent pull up, although I'm not absolutely certain yet. But we should see, yeah. I just need a little bit more confirmation, seeing as the market is having a bit of a bearish tone. But if we do have a bullish daily close, I think we're going to see a bullish continuation to 22,300 or 22,300, 22,400 zone, basically within this ash zone up here. So we just need to watch out for that level. Now, mind you, if you're looking carefully, you notice one key thing. The market has not bottomed out. Okay, this market has not bottomed out. We literally just kissed the edge of this zone. We didn't actually retest. We've not found support yet. Okay, and so I think it's very important to keep that in mind. This market has not found support yet, so there's a very good chance that we could literally turn at any point and come here. So have that at the back of your mind while we're expecting uh, a move up here. So you could just prepare for that by putting your stop loss somewhere here. I think that should cover you for the entire trade or the entire move. Yeah. And if it starts to look like this market isn't going to do that, simply take a sell position. It's going to save you a lot of stress. Okay, so the next question. Okay, yeah, pretty much unlike crypto, the Forex market usually goes to bed. So while Bitcoin had time to recover, Forex pairs did not, right? So if you're trading on the lower time frame, you would have seen this strong sell. Clearly, I was telling one of my students that the fact that we broke below this zone, broke out of this zone and were unable to keep up with that bullish momentum meant we were going to drop and basically break out of that zone completely, which is actually what happened here. Uh, with this tool, you see I was more on a sell bias, even though my stop loss was hit before the market actually made that 54 pips sell. But that's actually still what happened. The market even went as far as breaking below that support. Now we're at this minus zone, pretty much where the market just has a little chill before it has a bearish continuation. So we're just there. And right now the market is consolidating, really trying to see what's going to happen. And as I said, the market is closed, not opened yet. So probably in the next 1 hour, 1 hour, 30 minutes, the market should be open. And then we start to see a little movement. Although I expect some sort of volatility from the market when it opens. If you look on the lower time frame, we started having some serious moves on this market before it closed. So as the market opens, we can see some really interesting moves in the market. So you just have to keep your eyes peeled and see how the market or price reacts to these charts. Okay, so our third question, could you explain the role of pips in Forex? Okay, pips are percentage in points, okay? Um, they are literally the smallest denomination of a currency's value, okay? The smallest denomination of a currency's value. So right now, the current value of Euro USD is 1.0040. Now, the smallest denomination of this currency's value is this. Okay, so in order to gain a single pip, this market has to go from 1.004 to 40 to 41. In order to lose a pip, the market will go 4039. Okay, so I think you get the picture. So the pip is the smallest denomination of a currency's value, and as such, a gain in points, a loss in points means something. Now, Forex trading is pretty much margin trading, right? So the amount of points you make or the amount of pips you gather could literally mean different amounts of money at the end of the day. A 5 pips trade with a 0.05 lot size and a 5 pips trade with 0.5 lot size are not the same thing. 0.05 lot size with 5 pips gives you what, $2.5. 0.5 pips with 0.5 lot size gives you $25. So the amount of risk or the amount of leverage or lot size you use typically ends up deciding the value of your position or your position size per se. Okay. All right, so that's all the questions we were able to collect for today. So if you have any question, do ask on the program right now, and I'll give you an answer to the best of my abilities. Just unmute yourself and ask.
Hello, Wonda.
Yeah, good evening, sir.
Hello, good evening.
Yes, sir.
How are you doing, sir?
Very well, thank you.
I'm fine, thank you. I'm fine, thank you. Okay, thanks for having us tonight. Really appreciate.
Yeah, my pleasure.
Thank you. I have a question. Okay, so recently I've been kind of like studying. I'm into Forex, but I'm trying to deviate into the crypto side of Forex. But there's this question I have concerning Forex being when it comes to risk management. Forex about being calculated with pips and lots and everything, so you can be able to manage the risk. But for crypto, I don't know. It doesn't. I don't know if it's in the same lot or how do we manage risk on crypto assets?
Okay. Now, are you coming to trade crypto futures or the spot market?
Futures.
Okay. Now, for futures, it's similar to Forex in a way. Now, for futures, unlike Forex that uses pips, for crypto, we're multiplying percentages. Okay. The percentage gained by the lots, by the leverage used times capital. So let's say you're trading, your account size is the $100, right? Let me share. Let me do this. $100 account size. $100. You're using 5x leverage, right?
Yes, sir.
And then you make 3% on that trade. 3% profit, 5 times leverage, $100. Now, this 5 times leverage times $3 or 3% gives you 15, right?
Yes, sir.
15% at the end of the day.
Mm-hmm.
Now, this 15% multiplied by well, 15% of $100, $15.
Mm-hmm.
So this is how you calculate your profits for crypto futures. So I just used the $100 to make the calculation a little easier, right? So you're using
Yes,
leverage
sir.
to trade instead of lot size. And then instead of calculating how many pips you made or lost, you're calculating how many percent the market moved.
How
So
many
the
percent the market moved?
yes, how many percent the market moved from your entry. So that amount of percent multiplied by your leverage gives you how much you make or lose. So once you've gotten your position size, you can simply run all of this through your regular risk management strategy.
Okay, sir.
So
Okay,
literally
sir.
what you need to learn is simply position sizing for crypto. You don't need to change your risk management or trading strategy. You just need to position how to get your position size. I think that's just the difference.
Okay, sir.
So leverage instead of lot size, percentage instead of pips, and you're good.
Percentage.
Exactly.
Percentage on equity on the $100, right?
Yeah. Yes.
Okay.
Percentage on equity.
Okay. Thank you. Okay,
That
sir.
okay?
Um, yes, sir. Yes, I wonder.
Okay, great. All right, guys.
Thank you.
So, in the absence of any further questions, as usual, we're going to be on 9 p.m. live every Sunday. Every Sunday, we're going to be here. So, if you have any questions, you can either send it to us before the program or ask on the program. Either way, you're going to get an answer from me. Okay. So, have a great week, everybody. Profitable trading. See you next Sunday.
And you too, sir. Thank you.
Hello, you've reached the end of this video. I'm sure you gained tremendous value from that tutorial video, so I urge you to click the subscribe button and also turn on the notification so that you will be notified whenever we upload a hot new video.